Greetings, everybody. This is Jeff Scott. It is actually still the 15th around 10 p.m. Happy Father's Day tomorrow for all of you who, unlike me, are not doing colonoscopy prep, can actually enjoy Father's Day. I entitled this report, Bull's Limp into a Fed Meeting. This should be a doozy, folks. If they don't cut, I can only imagine what the market does in response. And if they make it sound like they're cutting because the market or the economy is going into recession, it's not going to be much better either. So this is going to have to require Powell, not like he listens to me, to actually thread the needle and do it just right. As always, for educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker. I'm independent. I pay for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. If you hear crying in the background, it's my spoiled dog, whom I love, who's already had 47 treats today, that's looking for the next one, and I can't do it. I entitle my education, Be Your Own Guru. I've had a number of influences, whether they're Ian Woodward and Can Slim, John Person, Van Tharp for Position Size Money Management, my buddy George Lee, and Cigar from Superior Profit are some of the folks that I pay attention to. I've had a couple of people asking about me doing live meetings this year. It looks like the answer is going to be kind of. John has a 3-day meeting, which I'm going to attend. Sometimes I speak, sometimes I just attend. And I will probably consider doing a 1-day meeting. It would probably have to be on, I'm just looking at my calendar, October 30th would probably be the 1-day meeting, either October 30th or Sunday, November 3rd. All depends upon the next comment I'm going to make. George Lee has asked me to partner with him and do a meeting. That meeting will likely be in Vegas. We're negotiating whether it will be the 3rd, 4th, and 5th. There's a Vegas Traders Expo, that's the 7th, 8th, and 9th. I'm actually hoping we do it the 4th, 5th, and 6th. And you can just stay out there for the Vegas Expo. So stay tuned. You'll hear more about both of these in the days that come. If I do these, then I will not do my own meeting in Palm Beach. What I need in my desert isle, besides high-speed internet, as you see when I do my programs, I spend a lot of time in TradeStation and Thinkorswim using a number of custom indicators. HGSI is my go-to program for aftermarket evaluation. EdgeRater is another great tool. And then I've listed some of the others that I use, including Sager's tools from SuperiorProfit.co. HighGrowthStock.com, that's the website for HGSI. I put it here not because I get a penny if you sign up. I truly am independent. I pay for things. I had them do some custom indicators. I paid thousands of dollars to get it done. That allows me to say what I want and not say things just because somebody's given me something free to say them. On the website, there's a free 30-day trial. Almost everything that I do is in the program. I will be coming out sometime for the end of the year with an add-on that will include some new indicators, probably a different business model, and potentially would even have a charge for that additional module because, as I said, I pay thousands of dollars to get those indicators built for me. The other thing is under investing strategies, there's a series of videos. Stock patterns are cyclical. Every time it feels like we're going down, think fourth quarter. On a dime on December 26th, we went right back up, and we clearly had a green circle move. Where are we today? I mean, I still think we're topping. Do we have more legs up? That would be great. Do we have a further correction to come? We are in May and June. But I think the bottom line right now is we don't know. I think the Fed hits the mark this week and cuts and says they'll continue to cut to support the economy. Markets going higher. If those additional tariffs get stopped in China because a deal happens after G20, the market's going higher. Same token, if the Fed missteps, if the China tariffs get escalated, if it turns out we don't have such a good deal with Mexico, if Trump is impeached, I can list the reasons why you could see the market go the other way. You have to be nimble, and how you trade has to change and be in line with the market's doing. So, at worst case scenario, I would say best case scenario, I'm uncertain. And again, I think news is going to drive it. I think we saw this week some up and down days and really minimal movement, probably related to the fact that the market's waiting for the Fed. So I've raised cash. I've got some smaller positions. I've sold premium. But don't get me wrong, I'm still leaning towards the long side right now, and we'll see if that's the right thing. Wasn't the right thing on Friday. I just want to point out two things. This is just a map of the sectors. It's all the main stocks that are in each of the sector ETFs. Look at energy. Is that weak? Almost everything is red. And at the same time, look at utilities. Everything is green. Interest rates are low. That should favor utilities. Home builders actually look pretty good as well. Some of the Home Depots are starting to look interesting as well. Big banks, little banks, maybe they're going to come around. They had some strength on Friday, but it'd be nice to get some higher rates for them. And I think everybody's expecting the Fed to dump rates. Right now, our dollar is strong, and you can see what that does to foreign markets over here. So mixed markets on Friday. I think we've got more of this to come, at least for the next 2 days. We look at the major markets. Let's just go into the program itself. And let's just open this up. If we look at the E-minis here, we can see the V bottom, a move up above the 50, a pullback and a test here. That could be a bullish signal, and we're going higher. I think there's too much news driving right now to say that that's for sure. The NASDAQ doesn't look quite as good. It's failed at the 50, but really tracking sideways here. And one good day, it'll get above it or pull back down to that 200. On the YMs, the Dow futures, also like the E-minis, are above the 50-day moving average, pulled back, tested, and moved up. Again, some people might, myself included, might think that's a bullish signal. If I look at the Russell here, let me give us some more days. The Russell is the weakest. It's struggling to get back above its moving averages. It's actually below the 200 as well. The VIX has come down significantly, consistent with a positive market. Although this week, really, the market was sideways, as we'll talk about. And then the dollar pulled back down to the 200 and looked like perhaps it was going to roll over. And it touched the 200-day moving average and is now sitting right underneath the 50-day moving average, and had a very positive week, and hence some of the weakness in the foreign markets. Now, it's interesting. Gold looks like it could be on the setting, getting ready for a breakout. It had a strong time, even with the dollar moving up. And I think that's because of some of the concerns in the market. Things like Iran potentially attacking a couple of oil tankers are not things that are looked on favorably by markets, which like to have everything known in advance and no surprises. On the weeklies, we'll just leave it here. You could see, if you look at each of the last week, you have kind of dojis like on all the major indexes, which is showing you that there is very little net movement on the week. If we look at Genesis, and I like this because I can get 5 different instruments: E-minis, NASDAQs, Russell Futures, NYSE, which is a cash index, and the Dow Futures. And the top is the daily, the middle is the weekly, and the bottom is the monthly. And it just gives me a sense of what the market's doing. And you can really see this V bottom we had. And notice that on the NYSE, we have a sell signal, probably because of the amount of energy stocks there. Other than that, on the daily, we're all in buys. On the weeklies, the E-minis in a weekly buy, but we're still in a weekly sell in the NASDAQ, the Russell. NYSE on the weekly actually went positive, as did the Dow on Friday. That's interesting. And then on the monthlies, you can see the big move up we had, and really the sideways moves of 2018. Rates, you can't see much here. They didn't change much this week. So kind of held steady going into the Fed. Now the AD lines, especially on the large stocks, which is this white thing here, are actually getting out towards all-time highs, which might make me think that the market strength is broadening. And here you have the NYSE, and you can certainly see that the spiders, the Qs, the diamonds are up, transports and small stocks are lagging, TLT turned down. If you look at the number of stocks above the 200, it moved up this week. Stocks above the 40 moved up. But interestingly, stocks, the 3-month new high, new low, actually sharply pulled back this week into a middle range. That may actually be good if you're bullish, because this just shows you that from a very short period of time, if anything, we are no longer overbought. The daily McClellan here, is this showing a daily? Yep. You could see we haven't quite made a new high here. The index has turned up. The oscillators pull back a little bit, but still above the zero line. I don't see a signal here, nor do I see a signal on the weekly. If we take a new high and we don't start to get to new highs on the summation index, I'll be concerned that there's some divergence there. The current buckets, 2/3 of the stocks in S&P 1500 are above their midline or their Bollinger Band. That has to be considered bullish, yet very few stocks are above or below the bands, so no signal there. We have not seen a HINDY fire in a couple of weeks, and that's good. Unfortunately, on the NASDAQ, we've lost the new highs and have 2% new lows, so that's a little concerning, but no signal there. The NYSE is stronger with, you see the new highs and the new lows are above 2%. Market tone, decidedly green here. All the major indexes are in the green on the Woody indicator, which is bullish. And on the sectors, all the major sectors are in the green. So much stronger feel this week and look this week. Again, Wednesday is going to be key. Canaries in the coal mine stalled this week. I think that's probably the best way of putting it. These stocks have so much press, and they behave somewhat independently. Tesla may have nothing to do with Apple and Amazon. Amazon, Apple, Google, and Facebook have had pressure because of concern about antitrust and too big to survive or to allow to survive. But, if anything, sideways move this week, just like the markets. And the index, which we put together on March 3rd, really has not rolled over. It got up to the top of its channel, failed to break out and pull back into the channel. Not really a signal here, except to say that despite all the changes in the market and the concerns that this sell in May go away, we're actually higher than where we were in May on this group of former leaders. When I say former leaders, this was put together on March 3rd. I think it's all about news this week, and let's talk about the most important news. You got a Fed meeting that begins on Tuesday, and on Wednesday you have meeting announcement, forecast, and a chair conference. I think this will do more to determine the market than anything else that I or anybody else can tell you this week. Yes, if they come out lower rates, 25 basis points, say they're ready to lower it again, that they're concerned about the tariffs, but they still see strength in the market, I think the market goes very high. If they lower it 50 because they're very concerned about the economy, I think the market's in trouble. And if they don't lower rates, I also think that's going to have a sell-off in the market. You got some jobless claims and home sales and some energy. But all in all, I think the big story this week is clearly going to be Wednesday. Over on the right, it's a very light earnings week, yet you've got FANG, Diamondback, I guess, Energy, probably. I don't know, although maybe that's FANG.com or something else. Check that. You got Adobe, that's a big one, as is Oracle, Kroger's, Darden, CarMax, but really not a lot of earnings this week. And, the quote in the bottom right-hand corner, so I don't need to repeat it. So we limped into the weekend with modest losses on Friday, but the major indexes were up 2.5% and 0.7% on the week. Again, if you look at the groups that are leading, that have positive force, clearly narrowing while the AD line improves. Big news week, likely to define response. And I say to the Fed, is it to raise or not to raise? To raise, no inflation, economy showing some signs of weakening, the tariffs are coming to get worse, Flattening yield curve, Fed does not want to repeat the fourth quarter lack of confidence. That's why they're going to actually got to change that, folks, because to cut or not to cut. I don't think anybody expects the Fed to raise. I'm so used to worrying about raises, though. So they'll cut it based upon what I just told you. If they decide not to cut, there's some good reasons for that. The economy is still strong. Not all the numbers show weakening. And Larry Kudlow came out on Thursday or Friday and said he expects the economy to still grow at 3%. That's a strong economy. And, you know, we still have the issue, does Powell want to look like he's under the influence of Trump? Don't forget China, G20 coming into the month, and no matter the good, whatever good comes out of the Fed, all it's unfortunately going to take will be if the China talks don't go well and we throw out bigger tariffs, that could be enough to send the market in tailspin. And barring any news flashes, may see markets just making time till the Fed announcement. Imagine what happens if they do not cut or hint towards an imminent cut. No video next week. I'll be on the road. You know, it's funny. I've been doing these things since before the 2007, 2008 market drop. I think I go back to 2003. I don't charge anything. I don't sell anything. A lot of people wonder why I do them. I do them because I do the same review that I do here every week by myself, every day by myself during the market week. So I'm just taping what I normally do. But sometimes I'll take a week off, and this week I have some programs to do for my day job, and I'll be in New York City, and I don't plan on doing it. I'm going to take my wife to a nice dinner after I'm done working instead of do this. Now, next thing I like to do is just go quickly into a couple of my charts in TradeStation and just get a sense of what the major indexes are showing me. If I look at the E-minis, and we're doing this Saturday, the markets are not open. So the E-minis still are in a daily buy. They're in a weekly sell and a monthly buy. They're blue and green. Green is you want to buy. Blue is more of a you can buy or sell at your choice. And red, you shouldn't be buying. You should be holding or going short. So you got a neutral on the daily, green on the weekly or the monthly. We're at 88% on the high jump bar, so we're not anywhere that's concerning yet. And our weekly bongo just turned green. So that's actually makes me feel pretty good about the market. We're not way above or below the envelope. If I look at the Dow, very similar looking, not much else to say, 83%, also a weekly bongo turned green. I look at the NASDAQ futures, not quite as good in that the weekly bongo's red. They're at 77% on the high jump, so less extended. But interestingly, the NASDAQ signaled a buy signal on the weekly, so daily, weekly, and monthly. So the NASDAQ looks okay here. And the Russell futures, as you could tell, they're lower in their pattern, clearly to sell on the weekly, and blue, buy on the monthly, and blue's not green, 74% in a red on the weekly bongo. The Russell's the weakest of the bunch, but they're all moving up nicely from that V bottom. You know, V bottoms are, we've always been taught that they're fraught for failure and not nearly as favorable as building a base or a double bottom or something else. The dollar, big move up here, as I mentioned earlier, still in a weekly sell, monthly buy, but that green bar is there. So the dollar's strong, and that will impact on metals. So gold had a big move here despite strength in the dollar, and I think that's got to do with some worldwide concerns, especially with Iran and concerns about the economy. But this is not a very bullish candle. If anything, this is almost a shooting star, although it does have a bottoming tail here, not just a topping tail. That's concerning. I'd like to see this pull back some before it assumes its move up. Now, if I go back and I look at monthly, we're very low in the pattern, and this could be the beginning of a big move. I just think you might have a pause on the short term. Silver, very similar appearance, although this bar perhaps doesn't look nearly as bearish, and also very low in its pattern. I go into HGSI, and again, I do this exact same analysis every week, every night, and I can get it all done in about 30 minutes when I'm not talking to you or preparing a slide deck. I do a much bigger analysis on the weekend where I like to look at 500, 600, 700 stocks depending upon what the market's doing. So I always start with my top-down view of the Major Markets Plus. Now I've taken the Major Markets Plus that come from Ron Brown. I've added the IWM, so I have a Russell, and I added the 50 FFTY, which is the IBD 50 ETF. And I like that because I'm a growth stock investor, and that probably closer resembles what I do in the market than something like the Dow. And then I'll quickly look at the major indexes. There's not, as you'll see, I don't think a lot to say that I haven't said already, or frankly that I said last week. We'll show you that as well. All right, let me set this up. S&P 500, it was in a box. It broke under, which was concerning. It's back right in the center of the box, living on the 50. This certainly could go either way. The fact that it's above the 50 and the 8's coming up here makes me feel good. The fact that it had this day here with a Eureka, which is a sort of our follow-through day showing strength in the market. I'll just call it a Jeffrey buy for now, and a Kahuna. The bongo turning green on the weekly. The weekly having a buy signal is all very positive. That said, all it takes is one screw up by Fed head Powell, and it doesn't really matter what I think. If I look at the Dow Jones Industrial Average, it looks like the same chart, so I'm not going to say anything else. It's not the same chart. It's just behaving the same. The NASDAQ Composite is running right below the 50. It's also in the middle of that box that I looked at before. And again, I think it will go sideways until the Fed acts, and if the Fed threads the needle, it'll break out to new highs, and if not, then we're going to have some more pain in this market in the short term. And this is what pain looks like. This is clearly in a downtrend. It can't get above the 200 or the 50-day moving average. This here is a chandelier stop, and this is the only index where it's trading now below its, it was below its chandelier. I don't know how it would have flipped. I guess it crossed below the chandelier. It got above the chandelier on Friday, but it still looks weak. The Russell being the weakest. That growth stock index I mentioned, 50. Sideways, kind of like a lot of people's portfolios. If we go and look at the dollar here, you can see it's up near the top. That tells you it's strong. And you could see here the dollar's in a huge uptrend. Looked like it was going to pull back, and it recovered very quickly, got above with a chandelier flip, a Kahuna, and a buy signal. So the dollar looks strong. And what doesn't look strong, which is probably good if you're long, is the volatility, the VIX, which is just really not showing us any signal to be concerned about, but sometimes when you get a long period without a signal, that's concerning in itself. I mentioned gold had a nice little run. So gold has run up for about 6 points, which is about 4.5%, 5%. Had a red candle high at the high jump with the dollar showing strength. I don't know if I'd be chasing gold right here. Let's just look at gold miners, see if they look better or worse. They actually look better, and they were one of the leading groups on the top-down review. So I already knew they looked better. Silver failed at the 200, so less perhaps interesting than gold. And oil here is in a downtrend, although I saw some things in the paper about OPEC is going to reduce supply. Plus, I would have thought it may have popped a little bit more with the tankers getting hit by Iran or potentially by Iran. I think that the dollar will weaken if we start lowering rates. I think with our rates being so much higher than the rest of the world, that itself encourages a higher dollar. So the next thing I did is I looked at the industry groups, and typically I use a 2-day force to let momentum do it. I've been playing around with one where I start adding buys and sells and looking at what percent of the stocks are in a buy versus a sell. My thought process is, and I'm still working through this. This will be part of the update add-on that I offer to the board, to the users. Is do I want to buy? If I find 3 stocks to buy, and one of them, most of the other stocks in the group are in a buy, and most of the new signals today were buys. Or do I want to find stocks where most of the stocks are in a sell, and most of the stocks have new sell signals and buy a buy? I think looking at strength in the number of buys or uptrends, and that's really what my indicator is demonstrating, is where I want to go chase. So I may come back to this more later. Actually, let's just use them right now because there's a lot of overlap. So the top one is precious metals. I looked at these and, I kind of thought to start chasing, especially with the strength in the dollar. You're getting up near a double, triple top here on Newmont Mining. This has had a bullish daily reversal. It's got earnings per share growth, pays a 4.4% dividend. I certainly don't think anybody be wrong buying this. It's just been not exactly a tight trend. It's been very choppy and going both ways. You're going to see the same thing. Here's Ashanti, Randgold Ashanti. Great, nice run up. Doji here. Anybody want to take a bet that it opens down on Monday and gives you a beginning of an evening star pattern? It may, and maybe it goes higher. It's something to watch. Barracks, big run up as well. Gold Fields, big run up, a couple of dojis. Look at the weekly, and you can see how much these things have moved up. They are strong. If I own them, I'm holding them. I'm not sure I'm buying new ones. Now, I made the comment that steel didn't look as strong. If I had to buy something new, I might be looking here. Get some volume coming in. It's got all blue-green here. New weekly bongo, makes money, no dividend. This is SSRI. This is one that I might consider. Now, the one gold stock that I like the most, which for some reason is not in this today, and it's probably because the pattern didn't fit, has been Kirkland. And I think on weakness, I've been buying this one. Why? Look at the growth rates, pays a teeny dividend. It's probably been the best performing over the last year or so of gold stocks. So I don't see one I want to go out and buy right away, but this is where strength is, and we'll have to watch what gold does. Here is home product stores. Restoration hardware, you're equal and opposite. Here, last quarter, it missed, it dropped. This quarter, it moved up. Got right back up to the 200 and failed. I'm not sure I'd be chasing it right here. I'd like to see it get above 50 in base, but they actually had a much more optimistic earnings report that came out on Thursday or after hours on Wednesday. Home Depot. I don't like the fundamentals here in the earnings or anything like that. Pays a small dividend. What I do like, uptrend, pull back to the 50, break out with a kahuna, weekly bond goes green. I like to see it at base a little bit. This would have been a better time. This is when I want to buy things. We talked about it last week. Buy from a base with momentum coming in. So it's gone a bit. I don't think it's gone too far. Earnings are not till August. Lowe's Corporation did not look nearly as good as Home Depot. Williams Sonoma, similar to Restoration Hardware, popped up, pulled back. I don't know enough about this to say anything. So, going through the top 2 groups. Haven't picked anything yet. Restaurants. Red Robin. I actually like eating at Red Robin. They give me unlimited vegetables, and the fries are good, and burgers are good, just not good for my belly and waistline. It moved up not because it had some great story, but because of strategic discussions And I think somebody put in a bid to buy them at 40, one of their shareholders, and they said thanks, but no thanks. But if you have a serious bid, send it to us. Starbucks looks great. I mean, this is one. Would I buy it up here? It's getting extended. Look where it is on the high jump bar. I want to buy it here. I want to buy it off the 50, especially the mobile breakout with the squeeze, Kahunas, and the Eureka. I'm not sure I'm chasing Starbucks here. If I own it, I'm holding it and smiling. Chipotle, it's expensive stock. It's hard for me to own this without having a reason. Maybe the reason is here that it's breaking out, and it's something to think about. It's just very expensive stock. I'd have to play that with options, and the options on this have never been what I would call cheap. McDonald's, not quite as good as Starbucks, but it's been in a nice run since February. It had a weekly high close doji here a week ago. High PE compared to the growth rate. So far, I like Starbucks better. Yum Brands, this is where I want to buy. Why do I want to buy here? Because it's a much more high probability buy, plus I can set my stop right below the 50. It's much easier than the distance here to the 50 and how tight or loose of a stop am I willing to do. Darden has earnings this week. This is an interesting looking chart because it's pulled into a moving averages. It's in a squeeze. My signal, which sometimes comes early, fired on Friday. If it didn't have earnings around the corner, I might tell you to go look at Darden. I'm not sure I'd play an earnings play with the news this week. All right. Next group down is REITs, and there are some good REITs and bad REITs. This is on my buy list. It's just Cousins Properties. So I could talk about a few things here. So what I'm looking for is this pattern, uptrend, sideways, and somewhere I want out of the base, I want to see a mobile breakout from a squeeze. I want to start to see Kahunas and my signal turn positive. It's not perfect, but this one made mine a week ago. It still makes my list. It's less than $10. It's got great earnings per share growth and pays a 2.7% dividend. Ventas is another REIT that looks interesting. Breaking out here with a mobile breakout from a squeeze a couple days ago, a pocket pivot, a Kahuna, weekly high close doji, and a 4.7% dividend. I like Ventas. I didn't put this on my list this week, I don't think, because it's getting extended. IIPR is it's a REIT that I think it's owning either factories or farmland for marijuana. And so it's had a big run. It doesn't pay, it pays a 1.3% dividend. It's under accumulation. You got to buy it here. I'm not sure you want to buy it here. Look for a pullback. If you own it, God bless you, enjoy it. Here's one that was interested, uptrend, big sideways move, bullish doji reversals on daily and weekly. And here I have a move up off the 50, a mobile breakout from a squeeze in Kahuna. My buy signal fired 1 day ago. Good earnings per share growth, 2.3%. I always do research beyond the chart, but from a chart perspective, that one gets me excited. American Tower, I've been talking about this for several weeks. Nice uptrend, a little bit of a pullback, giving you another opportunity to get into this one. Small dividend, but the major 5G player. Variant, don't know anything about this. Again, I want to buy them here. I probably want to buy it here. I don't want to buy it up here. It's too far extended, although it pays a 5.8% dividend. How do I know a stock is extended? On HGSI, I see that it's the highest, this little line here is at the highest it's been in the last 200 bars. Now, if I go into TradeStation, you can see it's above the envelope. These red line dots tell me it's got some divergences coming in on the MACD, extended on the weekly, and it's at 99.99 on the high jump. I can't buy a stock that's that extended. They can go higher, but this is a stock that's either going to take a breather and go sideways, or it's coming down. Nice steady gainer, expensive stock. All right, looked at enough of those. I go through the list. Apparel, footwear. This is not a group that's been a big growth list of late, but look at the weekly moves, 5-day moves, positive 5-6%, big 1-day moves. Under Armour, which was dead for a long time. When you start to see 3 kahunas in a row back here, a mobile breakout from a squeeze and a Bible gap up, you get interested. If you own it, great. It's probably a little late right now. I'm looking for uptrends that have pulled back to support. I'd rather be looking at this higher in the pattern. This was interesting right here. It's moved up a little bit, not gone away from me. Skechers makes money, no dividend. That looks interesting in this group. Gildan Activewear, small earnings, small dividend, uptrend sideways, broke out on Thursday. Not quite gone away from us, so that's one that's potentially playable. All right. PC Insurance, low interest rates, typically are not the best time for an insurer. They like high interest rates. They got a lot of money that they're investing or drawing interest on. Here's Chubb, nice uptrend, sideways move, mobile breakout from a squeeze. My buy signal, this one made my buy list. Allstate broke above its chandelier stop here. That was the time to buy. It's already moved up. It's sitting at the top of the high jump, so I'm not interested in chasing. Assurant, time to buy was here. Another time to buy was here. It's already started to run. It's at the high jump. Again, history has told me if you're the most extended you've been for the last year, you could get more extended, but you're getting close to when you're going to reverse. Arch Capital, ACGL, pays no dividend. Nice uptrend, sideways move, breakout, not quite at the top. That looks interesting. Mortgage Finance, talk about bad-looking earnings per share growth, but big dividends. Here's Annaly. This thing looks like it's based for about 2 weeks, 3 weeks. Earnings per share growth is poor, pays a huge dividend. That's a story of this group. Here's Two Harbors. Similar story, 14.8%. MFA, less down in its pattern, pays 11.1%. And if you want to look for some mobile breakout from a squeeze, my indicator and a kahuna all flew on Friday. Here's a 12.7% payer. Here's one that's actually a decent chart pattern, but it doesn't pay. It pays a 3.8% dividend. Now, this is actually a stock. Let's talk about how I would play this stock. Let's just talk about why I like this pattern. Now, to be honest, I like this pattern better. Why do I like this pattern better? Because I had a mobile breakout from a squeeze. I'm breaking out. I had a PSAR reversal. My indicator fired, and I had a kahuna. I also had a Hindenburg on the market that day, so maybe I would not have taken it. So we haven't moved much, so let's just play it off of Friday. So I'm going to make it bigger, and I'm going to bring on the data box. So on Friday, the high was $30, $39.91. The close was $39.86. So the first thing I would say is I would have no interest in my style, it may be different than others, as I would have no interest in owning the stock unless it took out the high. So I'm going to say $39.95 is my buy signal. Now, where would I put my stop? I typically look at the lowest of the last 4 days, $39.49, $39.61, $39.39, $39.27, hold on, $39.39, $39.12. All right, $39.12 is the lowest. It's a little tight. So I might set it a little bit below that 50-day moving average, which is at $39.09. So let's just say we set it at $39.05. That means I am risking on this trade 90 cents a share. 90 cents on a $40 stock is about 2.25%, between 2.25 and a 2.5. The beauty of this trade is I have a well-defined stop. I have a stock that's basing and now showing some momentum, and I have a clearly defined buy point. Since I travel a lot, I could actually set a buy based upon those parameters, get on my plane and know that I'd only be filled if I took out the prior high. And I also know that if the market tanked, I'd probably get stopped out before I got hurt. I love that. That's the benefit of a stock in a base, is you have a well-defined stop that's in a relatively narrow range and well-defined where you want to buy it. So I go through 10. I'm not a utility guy. Real estate services. Don't know anything about these, although the second one is an interesting looking chart. So here, let me make this smaller. Blue Green Vacations, pays 6% dividend. Ugly chart, not interested. Invitation Homes. Again, I want to buy this on pullbacks, okay? I don't know if I want to buy it when it's extended at the high jump line. Amazing fundamentals, beautiful run. I wish I owned it. If you do, you're lucky. Only pays a 1.8% dividend. Let's see where this thing goes. But right now, I would only buy it on a pullback. This is pulled back too much. Yeah, that was it. So it's really blue-green, which had a really big day here. It was up 31% in one day. Still in a downtrend. I'd really do my research. So I would go through the top 10, one more other specialty retail. Yeah, I like Ulta here. Might as well take a look at it. Uptrend, sideways, sitting right above the 50. Good earnings per share growth, increasing, no dividend, no surprise. Earnings are not to August. It's coming off a weekly high close doji. I think that Ulta looks interesting here. Lululemon looked good as well. In fact, if we back and I go to the plain today and I look at both of them and I look at specialty retail apparel, there you'll see Lululemon. So let's take a look at that, or Lululemon. And I will tell you, as much as I made fun of my cousin who wears his yoga pants 24/7, 365, even to professional business meetings, my wife bought me 3 pairs. I love my yoga pants. They're comfortable and they're great for traveling in, and people actually think they're real pants. So maybe that's why Lululemon's doing so well. The men are buyers now. Bottom line, like Ulta, you've got a sideways move. It had earnings come out, traded down. The earnings were great. It gapped up and came back down. I think you can buy it right here. And I may be looking at nibbling some of Lululemon this week. Now, I'm not sure why this one didn't make my list, so I'm going to go play with it. It had 4 new buys, and 77% of the stocks were up in the group. Let's look real quickly. T-Max. Max at the minimum, but I'm not in. I like the company. AEO showed up on a bunch of screens, but it's too far down in its pattern for my taste. Raw Stores, an old leader. I don't see the earnings momentum. Canadian Goose, no. Urban Outfitters, no. Maybe this is the time to buy this stock. 3 weeks base, kind of, sort of. My indicator fired, but these are tough ones to buy. Now it's got a lot of demand, so somebody must be buying it. So I think of the group here, Lululemon is the group that looks good. So I think the reason it didn't make my other list is because looking at the other stocks. So what would I say here? I would say that we didn't find a whole lot of great stocks on my top-down review. And that would suggest to me that maybe this market's waiting for something, and I think what it's waiting for is the Fed. So what I've been doing of late is I've been sharing with you the stocks that I'm going to be watching. The word watch, and I'm not talking about the one that's on my hand right now, means I put together these stocks in a watch list. These are stocks that I thought were interesting looking. Doesn't mean I'm going to buy any of them. It doesn't mean I'm going to buy any of them right now. But these are some of the stocks that I thought looked intriguing, and they go into a watch list, and from that watch list, I make my decisions when it comes to buying and selling stocks. Now that looks like last week, doesn't it? All right, let me pause here. Okay, I'm back. I have a lot of different computers, and I forgot to update that one file. We're good now. So here's the buy watch list from this week. First thing let's look at is it's actually a little smaller than last week. About half as many stocks were interesting to me. If I look at industry groups, you could see REITs dominate it, specialty apparel stocks I thought were interesting. I like this one, telecom carrier Zix, some of the insurance companies. This does not look like a high growth week of stocks, does it? No, home builders, those look good to me as well. So I'm a little bit nervous this week, but I did find some stocks here to look at. Let's just look at my filtered buys and see if there's anything that looks interesting there. These I take and do a couple steps beyond my GSI review to find them. Magna International, why did this one show up on my list? It's sort of gotten down to where it got in December. It's got a high closed doji here, which is to me the strongest buy signal I have, especially on a weekly. The daily has moved up as well. Not a great play, but looked interesting. It goes on a watch list. That's all it does. It goes on a watch list. Century Aluminum, another beaten down stock, has a high closed doji on the weekly, a new buy signal on the daily, a kahuna. It goes on a watch list. MGM, this one looked even more interesting at 1.8% dividend, weekly buy, also a weekly high closed doji. It goes on my watch list. Grubhub, sideways move, looks like it's starting to make a move up. It goes on my watch list. They're not great. We looked at SSRI already. Here's one of those REITs that pays a big dividend, 8.9%. This may be the best chart I have, which is Cousins, which we looked at before. Pays a 2.7% dividend. ADT, this is another bottom fish, but look, same place it came down to in December. A new weekly buy. It's in a daily buy. When I see multiple kahunas, I pay attention. I looked at the earnings per share growth, which is massive. This is a turnaround stock that pays a dividend. I like that. Here's one that's loose. Runs up, comes back, runs up, comes back. Looks like it's running up again. I'd like to see it clear my chandelier here. But this is ZIX. So, not the week of amazing looking charts. I'm the first to say that. On the short side, again, I'm not saying I'm shorting any of these tomorrow, but I build a list to see, because if these stocks start leading to the downside, I may want to consider. One that looked really ugly to me was Spirit Aerosystems. Failing hard at the 50-day moving average. Does it go down and test out this prior low? I think this stock could drop into the 60s. Some of the others, F5 Networks, a one-time leader, breaking down here as well. So I put this together, and then I build a watch list. And for those who've not been here before, it's a watch list. It's not a buy list. It goes into my trading system in TradeStation, and I basically look at about 700 stocks every day, real time, and I'm looking for signals to pop up. So I will have my buy watch list here, and I'll be looking for signals to occur during the day, including the superior profit Q signals, some of my historical signals I like, Bible gap ups, and then, of course, on a bigger monitor, you'll be seeing as well John Person stuff. On that note, once again, happy Father's Day to the fathers. We'll see you in a couple weeks. Again, no video next week. Take care, everybody. Goodbye.